Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Happy Wednesday, everybody. This is the one Wednesday episode that we do, and I hope you guys are doing having a great time. It is nice and sunny here in Tacoma, Washington, and we love the sun because usually it is rainy, and so I'm feeling good. It's a good day. It's a good day for a second reason because we have Bob Lachance with us on the show. Bob has done over 2,000 transactions, and in 2022, he did over 240 deals. And over 180 deals last year. So Bob is on it. He knows what he's doing. I'm super excited to have him on. Bob, thanks for hopping on the show.
Gabe, thanks for having me. Appreciate it.
Absolutely. I told you before we got on here, we always start with stories. We like to hear how people got to where they are. So take us to the beginning of your story and tell us, how did you get to the point where you've done 2,000 deals?
Gotcha. Quick story. Played professional hockey for 8 years. Towards the end of my career, I had to decide, hey, what am I going to do with my life? So I looked at any industry that had zero barriers of entry because I left school 2 classes short to get my degree. So real estate was it. Everything pointed at real estate. So I bought a courses back in 2004. This is when I retired from hockey.
All right.
Jumped into real estate. Like I said, no barrier of entry. So my first deal was a flip, and did pretty well, made 32 grand on it, but I got lucky. I was driving around neighborhoods. I learned what farming areas was. So I called on every property that had overgrown grass, had an agent sign.
Yep.
And I knew nothing. I mean, Gabe, I knew nothing, like literally nothing.
Well, I just luck is half of it, right?
Yeah, and I just knew I needed to make it. So my work ethic was there. And I had I was like a golden retriever, blinders on, you're getting hit by every, negative person that wants to try to bring you down, but I didn't listen to him. So I stayed in the game. And then after that first rehab, I jumped in the short sale world because I realized I had no idea what marketing was. I had no other deals, no other leads. I joined in my local real estate investment association. I ended up partnering with a dude that I had no idea who he was. He was a rugby guy, I was a hockey guy. So we had a very good, quick connection. Ended up door knocking for a full year on pre-foreclosure properties. Yeah, it was awful. I mean, it was awful, but the best experience ever because I learned the business from ground up. So I think that's important for anybody to know. And then I jumped into obviously
and real quick, because I've had other people come on the show who said they door knock. And there's some areas where I live, Seattle is relatively safe, but there are some areas that I'm like, if I went and door knocked in those areas, and these are usually where the flips happen, I might get shot. Did you door knock? I mean, what city were you door knocking in?
I was door knocking everywhere, mostly in like Hartford County area. Okay. I knew, you got to realize, I mean, I didn't know safety. I literally didn't know anything. I was just getting in my car. I was handed a list of pre-foreclosure properties and some leave behind packets, and I just door knocked. A lot of people would, open their blinds, shut them, not answer the door. It was very humbling, but I had some success. And then I pulled myself out of that role, hired a door knocker. Then I started negotiating with banks. We did, well over 1,000 short sale transactions as well. Then I got in the real estate education space.
Okay.
Yeah. While I was flipping property, wholesaling, rehabbing, short sales, helped start a company called Fortune Builders back in 2007. And my job was to run the back end of the coaching program and build the program from the back end. And the idea was, this in the coaching space, it's you teach the students how to actually do deals, and then you bring them on as coaches. So that was really the model back then. Grew pretty sizable. And then I actually was looking for a service to help students with tasks. That's how I started my virtual assistant company as well. On top of that, while I was flipping properties, coaching, and running a virtual assistant company back in 2014. Fast forward today, obviously I've been in the business for 20 years. So that allows you to, get beat up a little bit and also learn a lot of what's going on. So that's a long and short of what I'm doing. So today I have a virtual assistant company that has a little over 1,000 virtual assistants, and I have a real estate investment company. We're set to do over 200 this year as well. 200
Damn,
deals.
Man, that is impressive. It's interesting how like a lot of people in this space, they'll start doing one thing, wholesaling, maybe be an agent, flipping, whatever it is, and then they start just building additional businesses around that key, that first activity. And so it's cool that you did that as well. I mean, you got Riva, 1,000 virtual assistants. That's a good number of virtual assistants. That's fantastic. So you guys are still, you got Riva, and then you also are investing. What is your primary focus on the investment side?
Primary focus is wholesaling. We were
Okay.
starting to buy and hold, and then after COVID, all the prices shot through the roof. So looked at everything and we're like, all right, we're stupid to hold anything anymore
Yeah.
because it's really, really high. So we sold everything. I am looking in the near future to start buying and holding again. I'm probably going to go down south. I live in Connecticut. I don't want to deal with the winters. I don't want to deal with snow removal, etc. So probably looking down south on the buy and hold side. That's it.
Yeah. So Florida, Georgia, that kind of
Exactly.
area. Got it.
Exactly.
Um, yeah, that makes sense. So you said you're changing your trajectory to buy and holds. Is that because you see kind of the writing on the wall for the economy, or what has changed your attitude towards your strategy?
Well, strategy is still going to stay the same because we have our company here in Connecticut. I got to get because we're always hiring. I think we have 7 closers right now, acquisition guys, and we
Okay.
have 2 dispo as today. We have TC, we have admin, and a director of ops, and obviously myself, my business partner. So that's the real estate side of things. All of our majority of our leads are driven in through my virtual assistant company, which we're pretty fortunate to do. We're in Connecticut, Pennsylvania, and Florida right now. When the hedge funds start buying, we could go to any other state as well, but they're not buying right now, so we're just specific to those areas, and we mainly do wholesaling in those areas.
Got it. I don't want to go down too much of a rabbit hole, but I was listening to a podcast yesterday about the inverted yield curve and how it has, I think it has surpassed the duration. I think it was the 3 and 10 year has surpassed the duration of the Great Depression or something like that. And so people are thinking, within the next X number of months, they've been saying this forever, but now there's a lot more fervor around the coming economic collapse, or however you want to um, title it. Do you see that happening as well, or what do you feel is going to be happening in the next 12 months, let's say 6 months?
You know what? There's still a lack of inventory out there. So
Yeah.
prices are still high. And you look at, people at interest rates that were lower, they still have equity in their house. So if they have to sell, they have to sell, right? I mean, there's areas in Connecticut that are getting bid up 50, 100, $150,000 over list price still. This is
God
today.
damn.
So I mean, I don't know. And I lived through, 09, 10, 11, 12. And, there was opportunities back then and we're still investing back then. So if the economy goes up and down, we're still here. If you learn
Yeah.
the fundamentals and the basics and you continue to market, you're always going to be in business. It's a long game. It's not a get rich quick game at all.
Yep.
Yeah.
100% true. It doesn't help to take advantage of the swings in the market, to be prepared, I suppose. And the preparation for a down market is to have cash. And that's something that I've kind of been contemplating. Do I sell properties to have cash in hand so I can buy better properties? Or do I just, keep doing what I'm doing? But, there's no crystal ball. We're all just kind of figuring it out as we go. So, let's talk about wholesaling. That's your primary business on the real estate investing side of things. Wholesaling really consists of finding properties and then disposing those properties. Super simple. Let's talk just the first column, the finding property side. How do you do it? What's the main method that you guys generate leads with?
So we do multiple stuff. We do cold calling still, we do texting still, we do direct mail, we do PPC. So those are mainly what we do. And my recommendation is don't be a one-trick pony in business, because if that channel turns off, you're going to be in trouble. So that's why I always say hit multiple channels at once, and do it consistently. If you don't have a huge budget, it doesn't matter. Just go within that budget and hit at least 2 channels, 2 to 3 channels. So that's what I recommend. That's what I do today.
Okay. Put on the hat of somebody just starting. You said 2 channels. Start 2 channels. Be consistent with those 2 channels. What 2 channels would you recommend somebody pick up at the beginning?
most inexpensive is cold calling and texting. I know there's some, parameters around that, but those are the cheapest ways. Direct mail gets a little more expensive. PPC is a little higher. So I would say start with those two channels. And obviously, working with other wholesalers that have properties. If you have buyers, work with them if they have properties, and you put both your assets together, and then it's a win-win.
Yeah. Yeah, that's probably what I'd say too. I do like direct mail just because it's kind of a slow burn and you just send them out there, and over time they kind of come to you and you don't really have to work for it. You just send the mailers and the calls come. But cold calling for sure is a good one. Have you guys ever dealt with paper lead?
Yeah. Yeah, we tested it. Some of them are good, to be honest with you, but it's more of a long game. You're gonna get some, you're gonna have to sift through some stuff that's not good, but it's part of the game.
Yeah.
Do we do it? We do. Whenever we need more leads, then we'll turn on that channel. But again, like I said, you're sifting through some garbage to get some gold.
Yeah. We tried it for a bit and it was just too expensive. We were paying like what is it, like $200 to $500 a lead here in this area, and
that's a lot.
And it was too much. So we reverted back. So cool. That's the acquisition side. You are generating leads through the traditional methods, cold calling, texting, sending out mailers, doing PPC, all good stuff. Talk about dispo. How do you dispo your properties? How do you build your buyers list when you're just starting out in a new area?
Well, our dispo guys, they're hammering the phones all the time. What I would recommend if you're starting out, just go on Google, go on LinkedIn, right? I mean, you just scrape all of those individuals that are buying properties in your area. There's a lot of Facebook groups too within your investing area. So I'd go on Facebook and join those groups. There's a lot of pretenders there too. So do yourself a favor and weed right through them. You build your list. So we have our virtual assistants build our list and do all that I'm talking about. And then pick up the phone and pre-screen them. Ask if they're actively buying, what they can afford, what they can't afford. When was the last time they bought? Because you'll find a lot of people like, oh, send me everything. And, they never buy.
Yeah.
And there's some software out there that can allow you to build buyers lists. I think PropStream is one of them, Buyer Sonar, et cetera, et cetera.
And I use Property Radar. What I like to do in especially if we get a deal in new markets, we just got a deal in this tiny little town. It just popped up from somebody. We were marketing in Indianapolis, and we got this guy who owned a property in the middle of nowhere, Michigan. But he was willing to sell it for a great deal, and so we were like, all right, well, let's give it a try. Let's wholesale it. We didn't have any buyers up there, and so what we did was we just went. We've done this with other markets, but I felt like it was super effective here. You just pull, for the county that the city is in, we pulled every property that was bought with 100% cash for the past 12 months. And then if that person owns multiple properties in that county, we consider them to be a cash buyer, because nobody's buying properties with cash and with multiple properties unless they're probably a flipper. And that worked out well. We found a buyer pretty quickly. So that's a good deal. You do have to have a subscription to Property Radar is what we used. It's pretty cheap. It was like I can't remember how much we pay a month. I think it's like $100, something like that. So good way to find good buyers if you guys are looking.
And let me add something real quick. Agents are hungry now, so I would hammer the phones and call local agents. Say, hey, listen, I got an off-market deal here. Do you have any buyers? So that's another way. Today, that's working very, very well for us.
Perfect. How do you compensate the agents in that?
Pay them 2%.
3%.
Yeah, okay. Usually 2%, because I mean it's something that's given to them. Yeah.
Yep, makes sense. Let's talk about since I mentioned compensation, let's talk about compensating the entire funnel of the team that brings in deals and dispose them. Do you pay on hourly salary, or do you just pay on commission?
We just pay on commission. So we pay our acquisition guys 13% of the profit, and our dispo 7.5%.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
Yeah, I like it.
Yep.
Perfect. So you covered the acquisition side and the dispo side. Once you, I guess actually that we've covered the whole thing. I was going to go further into it, but we're only talking about wholesaling here. We're not talking about buying and holding. And you guys, wholesaling is your primary method. You're not looking into buy and holds yet, but it looks like you are starting to shift. At what point? What do you use as criteria to define whether you're going to be wholesaling a property or buy it and put it in your portfolio?
Yeah. So right now, like I said, the only thing my business partner is buying down in Jacksonville right now in Florida. His criteria.
Okay.
Yeah, he looks for cash flow. That's what he looks for. So, we do some marketing down there, and he'll pay our company between $10,000 to $15,000 per deal that our acquisition guys find. So it's a win-win for everybody as well. The criteria is we look to wholesale everything. So right now, for him, I'm very lenient on, even if it's a big spread and he still has a lot of equity in the property, if he's going to buy it, you know what, he'll buy it down in Florida. Everywhere else, we wholesale everything.
Yeah. We're actually looking in Gainesville. We looked at a number of markets down in Florida. Jacksonville had really good numbers, and I can't remember who it was that I had on the podcast, but they spent the entire podcast talking about how great Jacksonville was, just in terms of a real estate investing market. So it's funny you mentioned that. Awesome. So it looks like we have covered everything. Just thinking here. Nope, I think we covered it. Let's hop into the quick question round. Are you ready?
Let's do it.
Let's do it. Starts with education. Could be any form. Could be movies. Could be books, YouTube shows, whatever. Just give me 2 recommendations, one for general life wisdom and then one for real estate.
So, podcasts are the easiest, when you're in the car. I do, and I also do Audible, books on tape. I think for me, it's, I'm in the car a lot driving around. So, I think that is one very, very, important. I think everyone should do it. I just downloaded the Elon Musk story. I could even open up my Audible right now and let you know it's in my library. I think that's very important. You got, what do I have here? You got, I like Green Light with Matthew McConaughey. I downloaded that. 48 Laws of Power, is a good one.
Robert Greene. Yeah. All of his books are really good. He's a really good writer.
Very good. He did one with, 50 Cent too, the 50th Law.
Yeah.
Very, very good. Tim Grover.
It's funny. 50th Cent is actually, I read that one book, and then I've listened to other stuff. He was like a rapper when I was in high school, and I always think of him as like, a thug, but he's a really smart guy. He's really smart, really good investor. He would be an interesting person to sit down and have a conversation with. But anyways, I jumped into your story.
No, that's it. So a bunch of other ones like David Goggins, Can't Hurt Me. Got Relentless, Tim Grover, Winning Tim Grover. So a bunch of those things like that. A lot of Robert Greene stuff. So
yeah, for sure.
And obviously podcasts, like I said.
All right. Next question is for your younger self. So let's go back to the Bob who was going up to that first door when he was doing door knocking. Go back to him, look him in the eye, give him one piece of advice moving forward.
Real estate's a long game. It's not a get rich quick anything. It's, and I would say start buying and holding. If I went back 20 years ago, even if I bought one property a year, right? I would have had those 20 properties today, cash flowing, etc. Probably $10 million worth of real estate. So just in values are never too high to buy, right? Make sure obviously your cash flow is there. If you have a little cash flow, you're paying down the equity or you're paying down the mortgage on it. So it's, like I said, a long game. Think about this. 20 years later, you would have had all those properties that are pretty much paid down. So that's what I would tell my younger self. And it's not about the quick hit. It's about the long game. In real estate investing, it is a long game. And that's one thing I think everyone should, you feel that life goes by too fast, and it does go by too fast. But one property at a time will pile up, and you'll have a lot of cash within 20 years.
Yeah. Yeah. It doesn't seem like you're making progress. Days, weeks go by, and each day, each week doesn't seem like a lot. But if you keep going and you look down that road, and then 10 years go by, a lot has happened, and you will have a lot of progress if you keep them in your portfolio for sure. All right, next question is about the US. You've already mentioned you invest in a lot of different areas. So let's talk about your favorites. Give me the top 3 metros in the US that you're most excited about investing in today.
Well, I would say states that have title companies, that deal with title companies, not attorneys. That would be
Interesting.
my
Okay.
recommendation. Yeah, because you just have a lot of red tape when you're dealing. I'm in Connecticut, and you have 2 attorneys that are attached to every deal. More attorneys, the worse it is, right?
100%.
You know what I mean? It's just part of the game. It's when you're dealing with title companies, it's a lot easier to get transactions done. So I know that didn't answer your question, but I think that answer might be a little beneficial, especially for those individuals who want to do remote wholesaling.
Yeah. No, that it's funny. I was actually just buying a deal in Buffalo, New York. And there were two, but New York is it's a
That's a tough one.
lawyer
That's a tough state, dude. That's a tough state.
There were these 2 lawyers, my lawyer and the seller's lawyer, and it was just a nightmare. They just kept it. It was a nightmare. It just kept going back and forth, and calling out these small little things in contracts. And I didn't even buy it. Eventually, I was just like, because that would have been my first property in New York. It was a great deal, but I wanted the deal, but I realized I don't want that state. I don't want to have to deal with this going forward. So it's funny that you say that, because it's top of mind. All right, next question is about, we've already mentioned this, but I'm gonna twist your arm here and ask for your single favorite way. It all starts with getting in contact with the seller and generating leads. So give me your favorite way of finding deals in the market today.
Yep. I would say texting and cold calling. Like I said, my virtual assistants do all of that for us. We have a team that just drives in those leads every single day. So that's the best for us right now. That could change, like we talked about. That could change next week or the week after. But today, that's our best source.
Love it. All right. Next question is about lessons learned. Not every deal that we get into goes the way that we expect it. A lot of times we get into a deal and it goes a little bit sideways, but we learn the best lessons that way. So give me a deal that kind of a wrench was thrown into it and it went a little bit sideways, and then give me the lesson that you pulled from it.
Well, that one's easy. It's a knockdown rebuild in Greenwich, Connecticut. Back in when I first started, 2005, I lost 150 grand on that deal. My takeaway is best thing that ever happened, because that's shiny object syndrome to a T. I knew nothing about. I mean, think about this. I did a rehab myself. I didn't knock down, rebuild anything. I didn't know anything about it, but I got sold into a deal like a can't miss deal.
Yeah.
My takeaway is there's never a can't miss anything.
Yeah.
So, and don't get emotionally attached to it, because if you get emotionally attached to it, you will get burnt majority of the time. Again, I've been doing this 20 years, so that's one of my takeaways on that side of it.
Yeah, no, that is good advice. And it's so hard to actually, employ in your life, especially if you're like on the commercial side. We buy self-storage and mobile home RV parks. And when you're doing due diligence for, long-term due diligence, these due diligence periods are like 30, 45 days. You're flying out there, you're doing inspections, and you get really attached to these properties, and you're like, I need to close this property. But if a red flag pops up, you got to be able to walk away, because it's just not worth it. But it's hard to just cut the cord and not get emotional. But it's definitely something that needs to be learned. $150,000 would definitely hurt for sure.
That hurts.
All right. That brings us to the last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a 2-parter. Give us where can they find you, and then what can they expect when they reach out?
Yep. Reach out anywhere. I'm on LinkedIn or Riva Global, REVA Global.com. We also have my real estate investment company, which is Perchrock, PURCHROCK.com. We have a bunch of giveaways and things like that on LinkedIn, Facebook, etc. Any questions too, you could jump on a consultation call with my team. And real estate stuff, just you guys can send me an email at bob@rivaglobal.com if you guys have any questions about virtual assistants or real estate. Just reach out anytime.
Perfect. That is the website is Riva Global, REVAGLOBAL.com. You guys can go there to get virtual assistants for real estate. I will put that link in the show notes. So if you guys want to reach out, just click the little more in the description. It'll pull down that full description, and in there you can find Bob's link. All right, man, that wraps it up. Thank you very much for hopping on the show.
For having me, Gabe. Appreciate it.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. If you want to support the show, just give us a like, subscribe, share, all that jazz. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.
All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at Gabe at therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.